Howdy traders and investors, good morning and welcome to this battle. Welcome to the battle number 38, sponsored by ACAP Brokers. My name is Gary Fickard, known to many as the FX Big Dog on my YouTube trading channel. Just search the name FX Big Dog, or you can follow me and go straight to the website tradersnetworkclub.com. Now, if you are watching this trade battle on YouTube and you have not subscribed to this channel yet, you may want to go down there and subscribe to the channel, but not only subscribe to this channel, but make sure that you go ahead and click the notification bell as well, that you're notified every time we go live. And we go live every week. There's battles taking place all the time. Now, while you're down there, go ahead and smash the like button like nobody's business and share this video on your social media. We'd like to get this video out to as many traders as possible. Now, traders, I've got something really exciting to tell you today. We are giving away, in fact, it's not we, it's ACAP Brokers are giving away a $500 trading account. So if you want to go ahead and check out in the description down below, there's a giveaway for a $500 trading account, and all the information is in the description down below. So while you're smashing the like button, while you are subscribing to this channel, check out the description down below and check out the giveaway. Isn't that cool? We haven't even started the battle yet, and everyone is a winner already. Isn't that great? All right. Now, today we have two interesting traders, and both use technical analysis and fundamental analysis before making trading decisions. So grab a pen and paper, take some notes as we hear from these challengers how they were going to conquer the markets today. So without further ado, let me introduce to you the two challengers for today's trading battle number 38. Now wait for it. Here's the drum roll. In the one corner, we have Anka Metcalf. Anka is a founder and CEO of TradeOutLoud.com and has more than 20 years of trading experience. She has been on the trading battle once before, where she's managed to beat the markets. The question is, can she do it again? Anka, how are you doing today?
Hi, thanks so much for having me again.
You're
Doing good.
welcome. Great stuff. Good to have you here. Anka, just real quick, before we get started with the challenges today, tell the viewers, what is your preferred trading strategy?
I like to trade with the trend. I like pullbacks within the trend. I like to look at price action. So for me, price action is very important. And definitely, I trade in a sideways market as well. So even if I don't have a trend, but my preferred style of trading is where the velocity is. So I like to get the best amount of cash for the time spent in the market.
Okay, so it's fair to say that you trade up, down, sideways, and on dips and rallies.
Yes.
Good stuff. Well, good. You cover every part of the market, and that's fantastic. Well, good to have you, Anka. And I know it's the first time you and I have been together on a show, so it's going to be interesting to hear what you have for today. So good to have you here. All
Thank
right.
you.
You're welcome. All right. In the other corner, we have Kathy Lien. Kathy is the Managing Director of FX Strategy for BK Asset Management and co-founder of bkforex.com. She has often been a host on this trading battle, but not today. But this time, she rolls her sleeves up in the quest to conquer the markets. So good morning, Kathy. Welcome to the trading battle. Kathy, I think your mic is muted, so if you want to go.
Yes, it is great to be here with you this morning, Gary. It's always fun to be on the trading battle.
Absolutely is. Now I've got a question for you. The U.S. oil is technically showing that we have an extreme overbought. Now there's a lot of resistance at this previous highs in that. Do you think that Joe Biden's State of the Union speech a couple of days ago has made any changes where he mentioned that that they're working on 30 countries to release 60 million barrels of oil around the world? Could that news be lagging behind the technicals, or are we seeing something?
I think whenever we have release of strategic oil reserves, the impact on the markets is limited. I mean, We've seen this time and time again, even talk about it. The market has completely shrugged it off. When the announcement is made, I think that there's going to be maybe a little bit of a drop in oil, but at the end of the day, there are other factors that are affecting oil right now. And until there's sign of relief in those factors, I think, oil is in a very clear trend. If you're right, there's resistance, and that's important as well. But I don't think that I don't think oil is lagging President Biden's announcement. I think the traders just don't care about it,
Okay.
or they
We'll
just
get
don't think it's enough,
Sorry, what was that question?
or they just don't think that it's the real solution. They don't think it's enough. There's a serious issue with
Yes.
the removal of Russian oil supplies to the overall market, particularly for Europe.
Yes. Yes. No, I agree. Absolutely. Absolutely. Well, it's going to be interesting. I'm not sure if you and Anka has got something that you're going to talk about on oil, but there's a lot more conversation we're going to take place in there. But let's go ahead and find out, are the ladies ready to pull out the claws and get this battle started?
Oh
And
yeah.
excuse the pun for the
Yeah.
claws thing. I had to throw that in. All right. Well, let's go ahead and talk about the challenges today. We're gonna definitely have more conversation about your experience, what you guys favor based on what trading styles, and of course currency pairs that you focus on, or commodities, or whatever it is that you focus on. We're going to talk a little bit more about that, but let's take a look at the challenges for today. We've got 3 challenges for our challenges. We have the number 1 challenge is fundamental versus technical. I love that. Fundamental versus technical analysis. So trade your preferred strategy. So we're going to dig into your strategies and find out exactly what these 2 challenges really like to do. And we're going to pick their brains today. Challenge number 2 is FX versus commodities. Trade either asset class. So they have a choice of trading either asset class, whether it's commodities or FX. And our third challenge is going to be the best short-term trade for the next 5 days. That is right. We're going to pick out the winner. Well, we don't really pick it out. The winner reveals himself after 5 days. When they go ahead and place these trades, we go ahead and announce the winner and the champion of this battle. So those are the 3 challenges. Hopefully you guys are ready to rock and roll. So viewers, strap down. Things are about to get real. I'm telling you right now. Don't forget to subscribe, share, and of course, make sure that you go ahead and smash that like button. So let's get this show on the road. Let me go ahead and do a coin flip. Oh, you know what? Let's just go. Anka, you have the floor. You have the honors to start the first challenge today. All right. And that is fundamentals versus technicals. What do you have for us?
Okay, so I know that we have unemployment numbers that are coming in at 8:30. So that's going to be very interesting because the overnight price action in the indices was relatively flat. So there are also a lot of discussions today that are happening in Belarus. Zelensky is meeting the Russian delegation, hoping for a peace treaty. So I know that definitely, the Russians are looking for it, and they're looking for a positive resolution for both parties. So I think that's going to weigh in a lot today. And in fact, I think that fundamentals are going to be on the side a little bit, and it's going to be news trading. Definitely, at least until there's going to be some kind of agreement, if there's going to be an agreement. So I think that we're going to continue on trading the news, trading the market, and price action is going to lead us into the right direction, hopefully.
Okay, all right. And which fundamentals versus technicals? Which sort of market are you taking a look at right now that you want to go ahead and approach?
Okay, so I'm looking at basically futures indices. They're all into very strong consolidations. They have come from a bottom that was set on February 24th. That was the big slide to the downside. It was the big shock for the market. And right now the market has been into digestion mode. And in my charts are telling me that we should go long right now. The indices. Dow,
okay.
the S&P, NASDAQ, these are very strong right now. They do have solid support. They do have technically a double bottom. On the hourly charts, 4-hour charts show that we may have velocity to the upside. I do have some levels that are traced. I don't know if I can share the screen or.
Yes, absolutely. Let's do that because it's interesting what you're saying here. Yep.
All right, so I'm going to start sharing my screen. All right. Okay, let me know if you guys can see the screen right now. My cursor. Okay, yes, perfect. I can see it. Okay, so here's what I was looking at. The overnight price action. This is the hourly chart. We do have a double bottom support that is coming from a prior support high. So when this prior resistance now became minor support, so it's actually more consistent than a major support level. We do have a bullish above level at 33 940. So above this area, we're ready to launch higher. We're also having a nice inside day consolidation. Yesterday was trading in between high low of the prior day. We're just opening right now and ready to trigger above the high. So I think we're ready, really ready to ramp it up. 34,100 to 34,200 are going to be my target area for the Dow.
Okay. So so you're going to place a live trade right now as we go ahead and just ask you a couple of questions.
I can place it. Absolutely. I'm going to place it right now.
Fantastic. Okay, great stuff. And Anka, while you're doing that, looking at the fundamentals and the techniques and that. So what you're saying here is that when you look at technical analysis and you listen to what the news is telling you, that's putting all that information in based on news, based on technicals. You go ahead and make that decision. So I've got the final thing here. What is that final decision making? Because there's got to be like something that says, okay, this is a go. Is it because of the way the technical set up? Or is it because of the way the fundamentals are coming out? What is the decision that you make to make that final decision?
I'm a newer trading session trader, so most of the releases that are coming out that are influence and impact the market at the open at our 8:30. So I do not trade news. I like the news to lead the way, and then I like to let the market calibrate into 9:30 when the influx of the newer trading session is going to kick in, and it's going to show us the real direction and true to technical, true to value, and all that fleecing is away. I don't like to get into the fleece. I like to trade it with a little bit more size. So my entries are pretty accurate. So I define my entries based on the strategies that I use. I use, for example, a buy setup, which is going to be, for example, a trigger that happens when the candle that is rotating off of a support level is taking out the prior candle high. So I like to trade that. I like to place my stop under pivots. I like to take those triggers, and I only take trades if they have tradable void. So I don't take crowded trades. I don't take trades that are hitting resistance. I don't take I like to take trades that are really clear. I don't take a lot of trades every single day. So basically, and mainly I only trade 2 hours a day, like I said, and pretty much I take from 1 to 3 day trades a day. That's my limit. That's my budget. And those are my bullets for the day. I allocate every single day for my position sizing. I allocate about 3 to 4 trades every single day. That's it.
Okay, well, that's good. You've got a good trading strategy, and also in your trading strategy, do you have a sort of a limit to if you've taken 3 trades for the day and those 3 trades are not positive for that day, do you have a limit and say, hey, that's it, I'm just doing the 3 trades, I'm not going to overtrade today, it is what it is, the market took it from me today, but tomorrow I'll come back and fight again?
Absolutely. So I risk 1% of my account size on all the trades, and I use 3 to 4 trades a day typically. So for example, if I have 3 losing trades, I quit for the day. For example, if I have 3, let's say, winning trades, I keep on going. So if the market provides that is into a trend and the market provides that it has velocity, then I may go in the market again, but I'm not going to risk more than 1%. So I'm risking 1% on all the trades. So I'm being very consistent.
Okay. All right. Fantastic. Ooh, sorry, my bad. All right, that's great stuff, and we'll definitely dig more into your analysis on that. Let's go ahead and just recheck again. So you've gone in long on the Dow at the moment right now. Is that right?
Yes, I'm long on the Dow. 33,940 is the entry price.
Okay, fantastic. We'll take a look at the scoreboard in a minute there. We're going to go ahead and give Kathy an opportunity here to go ahead and start her challenge number 1, fundamentals versus technicals. Kathy, what is your preferred trading strategy?
Well, I preach that it's always about a fusion of fundamentals and technicals. It actually goes a little bit beyond that. What I look at is I look at the big story in the markets, what's going on. And then I look at the technicals to get a sense of, what the setups are and whether they're attractive, buy and sell opportunities. And I also look at sentiment because I've been trained as a cross markets trader when I was prop trading at JP Morgan. And so I'm very sensitive to what the other markets are doing. So, for example, like Anka said, stock futures are up this morning. And so, we can't ignore that. We're not walking into a day we're down, another 100, 200 points in the Dow. Also, U.S. Treasury yields are down 1.5%. So, that combined with what's going in the commodity markets, I'm looking at oil that's pressing up to 114. That, all of that, helps me shape the story of, what to look for today. Now, taking a step back, we cannot ignore the fact that the Russian-Ukraine conflict is the dominant factor in the markets. And I think, that guides us into some of the ideas that we're looking at because, at the end of the day, the elimination of Russian oil in the market is driving oil prices significantly higher, and that's going to have an impact on the Canadian dollar. Also, there's a very good reason why euro and sterling are underperforming the Australian dollar and the New Zealand dollar. And so, knowing those fundamentals and knowing that, for example, Australia and New Zealand has zero reliance on Russian oil. Whereas, the EU imports 40% of its gas products and also, relies heavily on oil from Russia along with the UK, explains why those currencies are hurt the most. And so we have to be aware of that. And we rode, the move down in Euro Aussie. I mean, Boris has mentioned this before. I love to trade Euro Aussie, Euro Kiwi, Euro CAD when no one wants to touch them because they are so dynamic and so responsive to fundamentals. With that said, though, they're also deeply oversold. And because they're deeply oversold, we have to be careful. I mean, we're walking into, first of all, a day where, I can argue there's really no direction because it's not as if, we're up 200, 300 points in the Dow and sentiment is very strong. It's not as if we're down 200, 300 points. So we're walking into a day with not very strong, clear direction because there's not very strong, clear news flow or developments. And that's also something to be very aware of.
Yeah, and you mentioned something about being extremely oversold at the moment right now, and in fact, there's a lot of those pairs that are at those extreme levels. When you go into the market in the early stages of the day and you look at the market technically, and you see that we're at the extreme levels, but the news is still pushing in that direction, do you still go ahead and trade that, or did you trade with caution, or do you prefer to stand on the sideline and just really start looking for some correction and get some sort of a wave structure in the market before go ahead and trading it again?
I definitely trade more defensively when we are in these oversold conditions. But because I'm a momentum trend trader, my strategy does not allow for me to pick tops and bottoms, nor do I really want to because, that's not my style. So I will either, be more selective and look for trades that, are not overbought, oversold, or I may jump into those, Euro Aussie is still looking pretty good and be very conservative with where I am taking my target. Also, time of week matters a lot because I think in the beginning of the week, you tend to have much more momentum and continuation. And then Wednesday, Thursday, it tends to be a little less. Friday, depending upon, usually after non-farm payrolls, for example, we tend to have very big moves. So, I think it's also very important to be sensitive to the time of day. I mean, for example, at BK, we have a certain profit target that we hit every week, and we hit that, very, and then some at the beginning of the week. So we have to. So right now, we're protecting our profits. We're still putting out, thinking about the ideas. We're still conservative, but we're trading defensively.
Okay, so do you adjust your strategy from a short-term trend trader to a mid-term trend trader when the markets aren't quite lining up the way you're hoping for based on oversold, overbought condition? In a sense, let me give an example. So if we've got the Euro Aussie dollar that's really oversold, but you still see the momentum pushing it down based on news coming out, would you take on a short-term trade just because you know it's oversold and there's a possibility of a turnaround? So you'd rather take on some short profits or just take on some short targets so that you don't stay in the market for too long and get caught up in the retracement move.
In some ways, I do. It's kind of, I think, the same answer as earlier, which is that when we are in overbought, oversold conditions, I will be much more conservative and quick to take profits because you kind of need to, because it could spike in your other direction quite easily. So
Sure.
I think we do have to be very careful with that. But like I said. I'm not a top or bottom picker. I'm only a top or bottom picker when the trend shifts and allows for that, and we're beginning to see a shift in trend, because I'd rather the market tell me that it's changing trend than to jump in and assume that it's going to happen. And that's what I really focus on.
Okay, well, fantastic. Well, Kathy, do you have a trade that you're taking on based on this information?
Taken this trade, which is the Aussie CAD trade. This is my chart here,
Okay.
and I'm going to zoom in a little bit. And what you're looking at is my zip strategy. The background basically reflects the longer term trend. And so whenever we have the currency cross above the indicator line and the background is green, the candle will turn white. So we've had that in Aussie CAD. We actually had multiple, what I love to see, multiple zip buy signals. 1, 2, 3, 4, 5. So I've already gone long Aussie CAD in anticipation, of a further move higher. Other trades that I'm looking at is, I also like that Euro Aussie trade that we were just talking about. It seems, Aussie is the strongest currency today. Euro is the weakest. Now, this is not the time of day that I trade. I kick off my trading session at with my team at 6:20, 6:15, 6:20 New York time. So if we go to the 15-minute chart, 6:15, 6:20 New York time, we're pretty much right over here. So we would have sold around 151.80. Right now, we're actually normally done with all of our trading for the day. Because we usually close our trades into data, into New York Open, but I still think there's more juice. And I think that, we could potentially see a little bit more weakness in Euro Aussie. Now, like I said, it's deeply, deeply oversold. If you take a look at the daily charts in Euro Aussie, it cannot get more oversold than this. I mean, what is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight days of losses.
I cannot count that much. It is a lot of days that have been bearish.
It's a lot of days. And so the trade really was at, my sweet spot, 6:15, where we got, moved 40 pips down. But I think right now, as we're speaking, it's moving, another 4 or 5 pips down. I think maybe it has scope for another, 25 pips. But, that's pretty much it on this. So, I've got the Aussie CAD trade, which is working nicely. And I'm also watching dollar Swiss. Dollar Swiss, this is the zip sell signal. 1, 2, 3, 4. I think we're going to go ahead and take this. Oops, sorry. I think I'm going to move to my other platform. I think we're going to go ahead and take this trade. This one I've been kind of watching all morning, which, let me just sell this first quickly.
So dollar Swiss sell, right?
Yeah, I've been watching this one all morning, and I don't know how much I really love it, simply because there's been a lot of jerkiness in the dollar itself. But we've got 1, 2, 3, 4, 4 zip sell signals, and they are generated when the currency pair crosses below the indicator line. The background's red. The proper way to trade is wait for the candle to close to confirm it. But we do have U.S. Treasury yields. If you look at the upper right-hand corner, dropping more. They're dropping. They went from 1.4%, I think, when we started talking, to down 2.3%. So I think it's telling us that the dollar wants to pull back, which would be consistent with the the fact that the there's not much going on today, and a lot of the major event risk it's just kind of quiet trading. So
Sure.
I like that. I also like dollar CAD, but we think we're going to stand aside from that. Euro Aussie is down. We're down already 10 pips from when we started talking. Unfortunately, I didn't really take that trade. I don't know if I really want to chase it. I'll kind of mull on it, and we'll see.
So with hesitation, right, you're losing out.
Yeah.
So quickly for both of you, thank you, Kathy, for that, and we'll keep track on the. So did you actually place a live trade on any one of them or not?
Yeah, we went long Aussie CAD.
Okay,
we
Aussie
went
CAD.
short dollar Swiss.
Okay.
I had an older dollar CAD short trade that I'm still nursing. And what were we just talking about? Euro Aussie. I think we're just gonna pass on this. Even though
Okay.
I liked it quite a bit, I think we're gonna pass on this.
Okay. Well, let's go take a look at the scoreboard quickly, and then I've got a couple of more questions here for both of you. Do we have a scoreboard or no? We don't. No scoreboard. All right. So while we're trying to get that up, just a quick question for both of you. So I'm assuming, just listening to what you're saying right now, Kathy, that this is really your trading at this time of the day is really outside your comfort zone because you really are in trades at about 6:30, 6:45, and by this time you're out of trade, so you don't really trade this time in the markets, right? Is that correct by saying that?
Well, I have some swing trades that I hold that are not time sensitive, but yes, I trade the very early New York Open, which basically leverages on the overnight flow. And it basically leverages on the continuation of overnight flow. And, basically US traders waking up, seeing, kind of news overnight and riding that move and positioning themselves for the morning's trade. Now I trade twice a day. I trade that. I also trade my best trading stage session is Asia. I usually lay on my trades at 8 p.m. New York time. I mean, last night we went short euro dollars and we also went short Kiwi CAD, and both trades hit profit target. I mean, we went when I woke up. And if you follow my Twitter feed, sometimes I say how I love to wake up to profits, and it's because it's the calmest period to trade. I mean, basically, I laid on my trade right around here in the euro dollar. Woke up this morning and we already hit our first target. And then same thing with Kiwi CAD. Kiwi CAD hasn't done much, but this spike at 3 a.m. Thank God, I don't even know what happened at 3 a.m. I was sleeping, but we laid on our trade right around this time over here, and this spike hit my profit target as well.
Oh,
So
very good.
those are the most leisurely trades for me because I lay them on overnight. I go to sleep, nothing happens. I don't muck around my trades. During the New York session, I tend to be a little bit more trigger happy. And so I might get in and out of my positions a little sooner, and not milk it for as much profit as I could.
Okay, fantastic. Well, Kathy, great. Thank you very much. We're going to move on to challenge number 2, and I've got questions for Anka. But let's go to challenge number 2, Anka. FX versus commodities. Trade either asset class. Which one are you going to be choosing today? And a question before you go ahead and look at do you trade automation at all, or is everything manual for you?
Everything is manual for me. So I day trade, I swing trade, I also invest in the market. So for example, I have been in trade in gold since last year. I think it was September of last year. I have been also in a trade in copper from last year in November. I have been in natural gas. Just took the trade earlier this week. So I have been in some commodities trades that are working out nicely. So I love to swing trade, and just like Kathy, I go fishing in the Asian session because those type of trades are nice. They're setting up. They're basically the underlying foundation is already set in your trading session. So you either trade continuation or you trade rejection into those sessions. And what I like to do is I like to do all or nothing. So it is a strategy that I use. Basically, you put your entry, you put your stop, you place your target, and then when you wake up, you're either stopped out or you're waking up in cash. And it has a really nice swing trading has been always my strong suit. So I have done really well in swing trading. Day trading, obviously, we have a performance averaging over 75 to 80% win ratio. So we're doing really well there. But these are trades that you don't have to worry about. For example, copper has been a very difficult trade, and I'm not gonna lie, but all you have to do is put your swing trader or your investor hat on when you're trading, especially commodities, and don't look at every single tick, because if it's a swing trade, and I know this happens a lot with day traders, they have the tendency to look at every single tick that is happening in the market. So keep it away. I always recommend having 2 accounts, and I do have 2 accounts, so I don't have to look at those trades every single day. And in fact, have a watch list, and the watch list is comprised of charts, obviously. And I typically look at the charts, and I have the chart set up on dailies or weekly, so I'm not tempted to look at any other smaller time frame charts, any other small, literally not smaller than 4 hour, at least if I'm doing some trailing. And if I see that, for example, the commodity is entering into overbought or oversold, depending on the direction, long or short. But yeah, this is commodities are usually swing trades, so I don't day traded them on a regular basis. I know oil has been really hot right now, but the problem with oil is that it has entered into very close to a maximum extension, very close to the 120 level. Yesterday we saw a pullback in oil, and I was wondering, it's like, what's going on with oil, you know? So let me just put oil up here. So guess what? I just found out that a lot of brokers have raised the margin requirements to trade it. So traders did not really have a lot of access trading oil. But this is oil right now. So as you can see from here, this is the monthly chart. It's getting very close to this 120 resistance level, which is a projection. It's a fib projection, and it has been elevated. So 1, 2, 3, 4 up. Usually after 3 bars, 4 bars, or 5 bars, but especially on the monthly chart, you usually expect 3 to 4 bars before a pullback. And it's getting very, very extended. Now, can it go higher? Obviously can run higher. And you asked earlier about the decision, you know, about President Biden announcing some news related news in regards to oil. Well, first of all, I think that's not enough. And I think that there's still going to be a lot of potential in oil, and especially even the green energy is running on oil, because you have those, you know, the fact that, you know, all of these um, energy generates through coal, generates, and coal is through the roof, through oil and natural gas. So that's how you're getting your green energy. So I think there's still going to be a strong demand for oil, and I think it's going to be really risky to start shorting something right now unless it has a proven pattern for a short. So I don't like to trade bottoms and tops. I don't like to guess bottoms and tops, so I definitely wait for some confirmation to step in before I take the trade. So I'm very conservative in my trading decisions.
Okay, good. And your long-term trading style, do you use indicators to determine the trend that you're trading? And when you say that you're swing trading, I'm assuming that you're a long-term or mid-term swing trader, because you can be a short-term intraday trader too, trading off a 15
Correct.
or 5-minute time frame. So you're trading
Right.
off a larger time frame, so a larger mid-term and
Yeah.
long-term swing trader, right?
Yes, so I do. I call them medium-term swings, and these medium-term swings are basically positions are held from 2 days to about 2 weeks, and the decisions are being taken off of the daily charts or the weekly charts.
Okay.
I also do these overnight trades, which are the short-term swings, and they're based mostly on the 1 hour and the 4 hour charts in correlation with higher time frames, because, like I said, I like to see it with the trend, or even if it's against the trend, I want to see that there's a strong possibility for a trend reversal. So I read into the trend and I look at the strategy that I apply to make sure that I see it correctly, and at least 1 to 2 time frames are in sync and are, you know, they bring enough evidence for me to invest into those, to provide liquidity for the market, let's say. And then I use my long term. So for example, gold is one of my long term. I picked it up at 1830 or 1835, I think, last year, and I have my profit target is way beyond 2000, so I'm willing to keep it for a very long time. So my long-term trades, my core trades, typically last from anywhere from 1 year to about three to 4 years. So I do have very, very long-term goals on those trades. For commodities as well. So for example, for wheat, I have been in wheat in and out. And as soon as I see a reversal happening, for example, on a daily, then I exit the trade, and then I wait for a pullback. Sometimes in time in a news driven market, you may not have another entry opportunity. So that's fine, because you do have a lot of other things that you can trade. You could go into the indices, you could go in Forex, you could go in anything else and trade. But definitely this is something that I like to look into the market, in commodities, mostly long term. And I love to day trade the indices. These are my employees on a day-to-day basis. So I mainly trade the 4 indices for 2 hours a day, from 9:30 till about 11:30 or so, and I wrap it up, and that's it. And for the rest of the session, I swing trade stocks. So I started my career trading stocks, and I'm still trading stocks, very, very much into my swing trading program.
Okay. Fantastic. Well, Anka, thank you very much. A lot of conversation about what you do, and we're going to dig more into the actual technical part of your trading, and we're going to go into that with Kathy as well. But let's just go take a look here. Did you place are you placing a trade now based on your selection on FX or commodities?
I don't have a signal yet. So I
Okay.
was looking at oil, but I don't have a signal yet. So I'm waiting for a signal to start coming in, whether to take long or short.
All right, you let us know when that comes in. In the meantime, we're going to go ahead and flip over to Kathy. Kathy, here is your opportunity to shine on FX or versus commodities.
Well, I mean, I'm certainly more of an FX trader than a commodities trader. I mean,
Nice.
gold moves a lot more in terms of point values, and is much more interesting in terms of profits. I think right now, I'm looking at my charts. I'm actually seeing some weakness in gold. You can see that's dropping below over here. Let me kind of maximize this chart.
Yeah,
Let me
yeah.
see,
Please do.
where
Yeah.
is it, gold? It's dropping below the indicator line, and we've got the possibility of lower highs, lower lows. So, and plus, that would be consistent with the rally that we're seeing in stocks today. So, I think if, we were looking at a commodity trade, I think short gold right now looks interesting to me. It's not super clear because the background is still, which basically is the long-term trend, is still green. But my sense, reading what's going on in the other markets, that we're probably going to get a bit more of a decline in gold. So I've got I trade FX, I trade gold. If we're looking at for a commodity trade right now, we can take a punt in gold, which maybe I'll go ahead and do and see how it works out.
I like
Uh,
it. I like the way you said that, Kathy. A punt, so it's a gamble, right?
Yeah, it's a real trader word, right? We can take a punt in gold and see how it works out. But in terms of the world of FX, we kind of talked about it already, right?
Yeah.
I still really like, it's not much is happening. I still really like this Aussie CAD trade. The dollar Swiss trade is still doing its thing. And so, those are, I mean, actually, nothing really has moved, right, since we last talked. um, but but on a day to day basis, I'm focused on currencies. Currencies is my bread and butter. It's what, gold just, is most of the time risk on, risk off, whereas currencies, I think, creates much more intelligent opportunities. And, if I'm going to look, for example, a week ahead, a few weeks ahead, it's always going to be where the currencies opportunities are. And, I think, one of the interesting things that's similar between myself and Anka is that you can hear from both of us is that, we trade 2 hours a day most of the time. It's very different 2 hours. I mean, hers is when I'm done, it's the New York Open, the stock market open till, 11 something. Mine's before the stock market open. We're done. And then we're looking for our position opportunities. And I think that's, that it's not about picking a random time of day and trading at that time of day. It's knowing what time of day works for us. And for me, like I said, usually I'm done right now. And there's a good reason for that because, a lot of times before the New York Open, you may have a flush right at the New York Open when the stock market opens. And then it's a reversal. I mean, the first like 15 minutes are usually flush and then reversal. It's like the easiest time to trade. Um, but yes, I mean, I think, to answer your question, I trade both commodities and FX, but FX is my bread and butter.
Okay. All right, well, fantastic. Well, I think viewers, if you listen to both Anka and Kathy, and listen to the trading strategy, it's very clear. And this is something you got to realize: we do have most of the market's volume running through the European trading session. And so, what we have in the Asian session, we have opportunities. We have opportunities, just like Anka mentioned, going out fishing, right? Look at the opportunities during the Asian session, setting up the trade. So by the time they move into the European session when the most of the volume drives through the market, their trades are starting to work out based on what they've decided in the Asian session. And Kathy does the same thing. But also Kathy goes into the latter part of the European, or at least at the mid part of the European session, the start of the US session, or at least before the start of the US session, and actually places trades during that period. Now there is, in my opinion, I've seen a lot of times the market moves, and this is a question for Kathy. A lot of times the market moves at the let's say the Frankfurt London Open, and it moves in a direction, and then sometimes during that time period that you speak about, there's normally a corrective move in the market. Do you feel that a lot of times that you're trading maybe a corrective move based on London breakout?
Can you repeat the first part of your question? Sorry, I was
So,
putting a
so,
stop
so like,
on my target on
yeah,
my gold trade.
that's all right. You laser focus there. That's not a problem. So the thing here is what I found is you have a London breakout. At the London breakout, the market moves in a direction, and then during the mid part of the European session, which is the time that you trade, do you find yourself trading the corrective move of the breakout at London?
Well, I wouldn't describe it as that. I would try to describe. I usually describe that as the real move of the day, because typically you have a London breakout. Sometimes it's dealers adjusting their positions, hitting stops or doing whatever they need to do. Maybe reacting something happens in Asia. The dust settles, then they kind of walk and position themselves for the real moves of the day. And so that's why once I come in, the real move of the day has been established, and in my experience, there's like a 80% chance it's going to carry over into the early New York session.
Okay, that's interesting. Okay, that's great, Kathy. Well, definitely the viewers need to take that information and do their own research. Remember, everything we're talking about in these tradings, in these battles, is just information, right? Educational, for educational purpose only. Take the information and do your own homework, do your own research, and in fact, follow these traders. Follow them. If you go to their social media, follow them, and try and get to understand exactly how they look at the market and how they take these opportunities. All right, we're going to go ahead and move on to the third challenge. We have great conversation here. Thank you, Kathy and Anka, for this great conversation here. Let's move on to challenge number 3, which is a short-term trade for the next 5 days. So let's jump into Anka. Anka, if you want to go ahead and let us know, what are your best short-term trades for the next 5 days?
I would like Bitcoin long.
I would like
Bitcoin
Bitcoin
has,
long too. I would also like it long.
I know. So I really like it. I usually trade it through GBTC, but definitely this is something that I really like. I could share my screen. Okay. So what I do like about it is that it's getting ready for pullback and rotation. It has pullback 3 bars all the way into the 20 SMA. Love this area. 3 is a fib number. Love it. It has a higher low compared to the prior low, and it's just getting ready to take out this prior high right here. So that's 45,905. So over that 45,905, this could be an early entry right now based on you could take it like I would like to take it with half the size here, and then when it hits the 45,905, I would like to add the other half in. And I do have targets all the way to 50,000 and 50,200 just to get it started.
Okay. So let's go ahead and put that in. Now stops and targets. Do you have like a sort of a? You mentioned you trade 1% of your equity in each trade.
Right.
So is that 1% being calculated because a lot of traders struggle with this part, and they struggle to be able to work out exactly how many contracts or lot sizes they can trade based on their risk. Now you're a manual trader, so you don't have this automated. So you have to go ahead and do this on your own. You go ahead and calculate and say, all right, 1% is my
Right.
risk. This is where I want to put my stop loss. I need to calculate how far my stop loss is and take that and build it into the equity and say, that's my risk that I'm going to go allocate towards a trade, correct?
Exactly. That's exactly what I do. So I do recommend traders that are new. And I have to say, like, I have been doing this for such a long time. I do have a template sheet because I do run a trading room. So I have a template sheet. And what I do is I have it on my desk. And when I have a position that is coming up, I just look and see, what the size, what is the appropriate size that I need to use. And I use the same size on all of my trades. So that's super easy. So instead of using a calculator, because in day trading, things may be moving super, super fast. And you really want to make sure that you're right on it, because I use limit orders. I don't just jump in trades. So I wait a lot for my setups to form. And when they form, I'm pretty much sure of my entry price, my stop price, and my targets well ahead of my position sizings. And then the missing piece comes with position sizing, knowing when my stop is, where my entry is. Based on that, I decide my position size. So that's the last piece of information. And what I like to do is, for example, I mentioned in Bitcoin that I see like a couple of targets or 3 targets at least to get the trade started. What I like to do is I like to scale out into targets. So for example, if I buy it now because it's based on, let's say, a medium term trade, or let's say a swing that is going to be happening in the next 24 hours, I would like to enter with half of my position. And then at a higher trigger, I would like to add the other half in. And then when I reach, for example, target 1, I like to scale out. So I'm going to sell the lot that I have purchased into my first medium term. So let's say the shorter term swing that I initiated on a smaller time frame. So that has a good chunk of cash that I can pull back from the market, protect, have some money in the bank, and let the winner, continue its trajectory towards my target. So when I hit the last target, for example, if I don't have enough size, then I trail the whole entire position. So for example, if I'm with one contract, I trail the whole entire position. I don't take myself out of trades ever. So I take profits, for example, in target 1 or target 2, but for the rest of the target, if I have a powerful market, if the market is still ongoing, I leave myself in. So I let the market take me out. So that means that at any sign of reversal, then I look and gauge that reversal, and then I trail myself out of the trades. But I'm always keeping my last lot for the possibility of a home run, because you never know when you're going to get it.
Yeah. It does any emotions kick in when you start into when you trade? Because trading manually and being in front of the computer and doing this stuff manually, and this is for those new traders out there who experience the same thing. Do you get any sort of emotional about your trades? What do you do to combat emotions? Because that's the biggest killer when it comes to profits. Is people get emotional and they make terrible decisions when they start to think emotionally and start thinking sensibly?
Gary, that's a great question. And I get that question a lot. And the truth is, I know it sounds impossible, but I do trade stress rate. The reason for that is because I know I have 3 or 4 trades that I can trade every single day. And the other thing comes from position sizing. So I know that I'm risking an allocated risk amount. So that's where my comfort zone comes in. And in fact, I do trade 1%. So that is really, really less than the vast majority that is trading 2%, 3% or more. So I think size matters. And when you do not have size, you do not feel the heat, because the emotions are coming when you see that the account is going negative. And if that amount of money is you're not mentally prepared to lose, then that is going to really put you in the hot spot, and you're going to have that hot potato feeling in your hand, and you're going to get all emotional. And that is when you have irrational decisions. That's when you take irrational decisions. So I think size is the one thing that can reduce the stress. Definitely there are going to be emotions involved because it's trading, but the emotional level is going to, the emotional level is not going to affect the decision level. So this comes from size. I am more than certain that in every single case, if you ask traders why do they get emotional, is because they are overloaded in one trade. They want to make all their money in one trade. Well, trading is a marathon. It's not a sprint. So it's always, easier to have a small piece of the pie and safer than to have the whole pie all at once.
Yep, absolutely. Pigs get slaughtered, right?
Yes.
All right. Let's jump in. Okay. So we're going to jump to Kathy right now. But Annika, you just confirm your trades that you placed right now on those your best short-term trades.
Okay, so yes, there are two trades that are going on right now. There's the Dow at 33,940, and I do have Bitcoin at 43838.0. And this trade, the Bitcoin trade, is going to be the longer term trade. So that's going to be the 5-day duration trade. So
Perfect.
this is the first entry. And like I said before, based on the weekly rotation on the charts, when the price is going to hit over 45,905, that's where I would like to enter the other half in.
Okay, so you're going to put another like a pending order.
Another one, yes. Another.
Okay.
I'm going to place another order at 45,905, over 45,905. So probably it's going to be 45,910 or 915.
So you're waiting for that breakout.
Yes.
Okay, good, great stuff, Kathy. Challenge number 3: best short-term trade for the next 5 days.
Yeah, so crypto is always the one. Having done so many trading battles, I know from experience that the volatility in crypto can easily overshadow the moves in currencies. But I'm going to stick to what I know, and even though currencies are slow movers, and we're not going to over lever into our position, I think next week we've got the European Central Bank monetary policy announcement. And I think they're going to be worried. I think, we're hearing a lot of, there's still, obviously they're worried about inflation, but I think, they're going to be very worried about the Russian sanctions. And I think that, overall, they've, been much more conservative than many other central banks. They, have not, jumped on the bandwagon with raising interest rates while everyone else is saying, they're doing it, they're already done in March, it's going to happen in March. And I think that their conviction in that view is going to be even stronger. So, there's a couple of ways to look at this. There's a very good reason for the continued sell-off in Euro Aussie, Euro CAD, Euro Kiwi. I do think that we're going to see some additional weakness. I still like that Euro Aussie trade, Euro Kiwi trade. I think, Euro Kiwi may be a bit more of a, it's not, let me go to my full screen chart. I haven't turned to it. So there's two opportunities. It's either Euro Kiwi, which this is old. Let me delete that. Which isn't at the bottom of the chart like Euro Aussie. And then there's also, Euro Yen. Now, I don't love Euro Yen today because stock futures are up, but at least on a technical basis, Euro Yen does look like, it's rallied and it basically is struggling to contain that rally and wants to pull back. And I love that it's below all of the major moving averages on the daily chart, 4-hour chart, and 1-hour chart. So on a short-term basis, I like shorting Euro Yen, and then the more aggressive push trade would just probably be shorting Euro Kiwi for a move down here. And I like that because, even though New Zealand is contending with, a record amount of COVID cases right now, which is not great, I think that their lack of reliance on oil on Russian oil is very good for New Zealand. And another thing here is that there is a possibility that that the market is oversold and that we could see a further bounce in stocks. And if that's the case, Kiwi should outperform Euro simply from a fundamental basis. So, I like Euro Kiwi. I think, that would be my favorite trade, with Euro Yen being the secondary trade. But Euro Yen's not quite ready for prime time, I think, until we get a reversal in stocks.
And you're not concerned about the Euro JPY being at that support level, quite a strong support level there that's been bouncing in a range for some time. You believe that's going to break through that support based on what you're seeing?
No, but I think that, that support level is down at 127, 40, which, is 67 pips, 60, 70 pips. And usually I trade very different from Anka. I trade high accuracy versus high profit, where I believe that, it would never want to be a position where one trade makes your entire year. Because in the case that you miss that trade because you're sick, you're on vacation, we want every single trade to have the same degree of possibility of success. And so, usually 60, 70 pips is more than enough for my profit target. But with that said, though, I think, my trade for the next few days is still going to be Euro Kiwi.
Okay. All right, good. Well, let's go ahead and put that trade in. Can put that trade in, and let's see. Now, I've got a question for both Anka as well as Kathy. You both trade manually. You've been doing this for a long time, and I've been doing this for a long time. In fact, I've been doing it for almost 30 years. And in my first 10 years of trading, I did everything manual. Then I went into a hybrid trading approach where I took everything I know about the markets and everything I want to look for the market, and I go ahead and put that in code and use automation. And then what I do is I define the directional bias manually. So I use the time to define the directional bias, but then I use automation to deploy in that direction so that I don't have to be in front of the computer during those hours to trade the market. I let the automation do that for me. So they do the automation does all the heavy lifting. Have you guys? I'm saying guys, and I'm considering you as ladies, but guys, do you consider using automation in your trading, or do you still feel more comfortable doing this manually? And automation is definitely not in the horizon.
I'm a control freak. So I need to be watching the markets, and I don't trust the markets to do what, I mean, anything can happen, right? Because we're trading a very volatile market at time of the day. Any news bomb could happen, any news flow that could, either push the trades in our directions or sabotage them. So I don't trust the computers. And I can't say that I'm completely discretionary, because obviously both Anka and I have a trading strategy that we trade. It's just, for one reason or other, we haven't coded it and allowed the robot to run itself. And at the same time, I don't believe in pure robot trading either. I think that, if robots could run the world, then humans have a serious problem. So we do have a lot of execution scripts, on the other hand, that we use that help with the process. For example, we have a lot of one-click execution scripts where if we have multiple trades on the same time, we can click one button and can close all of them. I have scripts where when I put on the trade, it will automatically attach the stop and target. There's a lot of different things that we use to increase the speed of getting in and out of trades. But the actual ideas themselves, I have long used a combination of, technical analysis as well as fundamental analysis. It's worked really well. And whenever I try to let the robot do its own thing, or just to do it on technicals, it never works the same way.
Yeah, you see, what I do is I combine technicals with automation. So finding the directional bias, doing all the homework that you need to do, just like yourself and Anka does. Finding the directional bias, do you define the overall direction of the market, and then going ahead and saying, hey, based on what I'm seeing right now for the next week, next 2 weeks, I want to be bearish Euro Aussie dollar. And all your system is going to do is going to take what you do manually, and it's going to go ahead and look for those trades throughout the day, throughout the morning, and place the trades for you with your right equity management, the stop losses, all that good stuff to protect your positions. But at least you're not having to be at the computer stuck there all day long. But now I'm not judging you. I just know that there are traders that like to be hands-on, like you say, control freak that likes to be in control of things. But it's okay. It's just that you've got those type of traders where one goes ahead and says, hey, you know what? I like to be hands-on all the time, every day, all day. And others say, well, you know what? I'm letting go of the reins. At least I'm in control. I'm the manager. I'm the directional bias. I define the direction, but I'm getting my workers, which is the trained robot, to do what I instruct them to do, which is different. Anka, what is your opinion on that?
I think that Kathy's right. It's not that we're control freaks, but we like to be in front of the market. It's our money. And I think that we have a better control doing it manually. So I agree. We do have levels. We do. I do have levels that I trade on. I do have precise signals that I trade on. It's not that it probably can be translated into a transcript. but it's the control that you have over price. It's the fact that if the market environment changes all of a sudden, you're able, if I'm in front of the computer, I'm able to take a nanosecond decision and say, hey, I am going to exit the trade, or I decide to add more to the trade. So I think that from from this standpoint, I feel a lot safer when I'm handling the market versus having a little gray box or a little black box doing my trading. I
Okay.
think that yeah. It's just a personal preference, and like I said, I like to be in control of my money. It's just like when you give your money to a hedge fund, right? So your return on that hedge fund may be 8% per year, but my return for one trade can be like 5% per trade. You know what I mean? So you have a better control over your trades.
Okay. All right. Fantastic. Well, do you enjoy, Anka, do you enjoy cooking?
I do enjoy cooking. I wish I had, more time, to cook, but I do enjoy cooking.
Do you ever use the microwave? I'm just
Um,
saying. I'm just
Nothing
saying.
good comes out of the microwave.
well,
Nothing good comes out of the microwave.
All right. Well, that's me. I'm a microwave baby. I'm just like, hey, you know what? Give me the push buttons. Let me go ahead and walk away. 10 seconds later, my food's ready to go. That's not a good thing, but yes, I'm a microwave guy. All right. We have a lot of it. Listen here, guys. Once again, I'll remind those viewers that have just joined us or have come in late or whatever the case may be. If you haven't heard already, there is a giveaway. Check out the description down below. ACAP Brokers are giving away $500, a $500 trading account. Check out the description down below. It's also in the Instagram channel as well. Make sure you go ahead and follow this channel and check out the description below. While you're down there, smash that like button. We're going to go ahead and take a look at the scoreboard if we can. Do we have the scoreboard here? I wasn't sure if we can get the scoreboard up. Let's take a look right here. I'm going to give it 2-3 seconds. Do we have a scoreboard? Nope, no scoreboard. That's okay. We've got trades in. Traders, you've heard exactly what Anka's doing, what Kathy's doing. Their trades are in. It's locked in. We're going to track this for the next 5 days, and we're going to go ahead and report the winner. Make sure you guys follow Instagram, Twitter, Facebook, the whole shabam. Get in, follow, and find out who the winner is for this challenge battle number 38. Now, before we close off, I want to make sure that we give Anka a little opportunity here to talk about how can the viewers find you, get in touch with you, learn more about your trading style, and also please do me a favor. You have your charity of choice as well. Share with the viewers as well what your charity of choice is and why.
Okay, so traders can get a hold of me on our website. It is tradeoutloud.com. Go to the website. We provide tons of courses, and I do run 2 services. I run the futures live trading room every single day from 9:30 until 11:30, 12 o'clock. It depends on when we're all wrapped up in the trades. All our trades are just like called in here, so with precise entry, stops, targets, and management for the trade. So I'm on the mic constantly. I want to make sure that all of our subscribers and have access to easy trading and stress-free trading. So that's my goal, to make trading as stress-free as possible. And again, visit our website. You could also visit our YouTube channel, where we have tons of free videos of past webinars, and what we do, our methodology, what we offer. And our charity for this time around forgot the exact name of it, Homes for Our Troops. So this is for our veterans. This is for disabled veterans that are less fortunate, and literally, they need a lot of our help. They are protecting our country. They do a lot, and they put their lives on the line every single day for us. So this is something very dear to me. So my charity of choice is Homes for Our Troops.
Fantastic. Well, that is awesome, Anka. That is really good. So there you go, traders. Check out that information, and also make sure that you follow Anka in her trading room. Get connected with her. Got a lot of information that these ladies are sharing with us today. Now I know why they call the Queen of Forex. All of them are called Queen of Forex. Let's go ahead and give Kathy the opportunity. Kathy, how can your viewers get in touch with you? Learn a little bit more about your trading style, but also learn a little bit about the charity of choice that you're offering out today.
Sure thing. The best way to get in touch with me is to follow me on Twitter. My handle is Kathy Lien FX. Make sure you spell it right because I have a lot of imposters. I will never, ever, ever direct message you over WhatsApp, Telegram, Facebook, Instagram, whatever. So if someone is coming in as me contacting you directly, they're an imposter. But, Kathy Lean FX is the best way to follow me on Twitter. We also have a YouTube channel, BK Forex. So anytime we're doing anything interesting, exciting, those will be great places to see those announcements. In terms of the charity of choice, mine this time is the International Rescue Committee. I've been spending all my time looking for ways to donate to the Ukraine crisis. So, this is one way you can do it too. And there's a whole bunch of different ways. This charity itself helps the families affected by it. It's dear to my heart. I have a lot of friends who are of that nationality. So, give that a look. Hopefully, even if I do not win this trading battle, I encourage you to donate to the cause.
Fantastic. Well, everyone's going to be a winner today because remember, don't forget about that giveaway. Everyone is a winner today. Whether you're part of the challenge or you're one of the challengers, everyone is a winner today. Check out that $500 trading account in the description down below. Kathy, thank you very much. Thank you for the information that you passed on today. Anka, thank you very much. It has been absolute awesome today. You guys are so good at what you do. You give it a lot of content, a lot of information. In fact, I just sat back and I said, you know what, I'm just going to listen to you guys because it was great content, great information. And I think a lot of traders today learned a lot from that, and they can certainly go ahead and follow you. And again, what is this thing with these YouTube, not just YouTube, but all these trolls that are trying to scam people? It's just become huge. Make sure that you've got the right person that you're following. And like Kathy said, don't get caught up in someone sending you a direct message saying, send me money, I've got some great opportunity. It is fake. Don't get caught in that. Listen here, it's been awesome. I really appreciate everyone here. Before we say goodbye, I'd like to go ahead and thank the sponsors, ACAP Brokers. And as a show of appreciation, let's go ahead and smash the like button like nobody's business, like there is no tomorrow. Go ahead and subscribe to the channel, and make sure that you also click the notification bell so that you know when we go live. Now, I'm Gary Fickard, wishing you joy, success, and lots of profits. Kathy and Anka, it's been awesome. I'll see everyone next time.